You may have wondered, is it possible for me to establish a foundation of financial success with my salary? Well, despite how unlikely it may seem, it is extremely achievable, and in this video, we'll show you how. Number 1. Make a financial knowledge investment. According to a quote from Warren Buffett, investing in yourself is the foundation of any wealth-building strategy. Building wealth is a difficult endeavor to do since it requires perseverance and dedication. When you earn your salary, it can be tempting to immediately go all in and buy yourself new clothes or a phone. But you need to ask yourself, will it make me more money? Will I ultimately gain from it? If the answer to this question is no, you should try to make an investment that will benefit you in the long run. One method to gain financial independence and make more informed financial decisions is to educate yourself on personal finance and wealth development techniques. Financial education is essential because it equips you with the knowledge you need to manage your resources better, save more money, budget effectively, and teach good spending habits. Additionally, it gives you control over your money and aids in selecting long-term investments that can eventually lead to financial success. Number 2. Acquire a skill set. Having a financial education is crucial, but applying it can be a whole different story. One way to make the most of your knowledge is by learning a useful skill. Take a close look at your areas of interest, stay updated on current trends, and become an expert in a skill that is in high demand and has room for growth. By creating a schedule and effectively managing your time and energy, you can start earning money. It's important to note that you can gradually accumulate a significant amount of wealth and secure a stable financial future by following these steps. Number 3. Launch a side business. Starting a side business is something you should also consider as soon as you get paid. The great thing is you don't have to create a whole organization or firm. It can be as simple as offering a laundry or catering service, or even just honing a skill you already have and turning it into a source of income. I understand that many people are afraid of starting a side business because they worry about not being able to handle it and potentially losing their jobs. But let me tell you, that's not the main focus of having a side hustle. With careful planning and good time management, you can start a side business that not only brings in some extra cash, but could even grow into a full-time job in the long run. Number 4. Diversify your income streams. You know that saying, don't put all your eggs in one basket? Well, it turns out it's pretty sound advice. Nowadays, the most successful individuals are about allocating their efforts across different revenue streams. Relying on just one source of income can provide some stability, but it often limits your ability to build wealth. If you want to create multiple revenue streams, you've got to have an entrepreneurial mindset and be open to seizing any opportunity to make money. It's important to connect with other business people, industry experts, and like-minded individuals who share your values. In conclusion, having several sources of income not only reduces your risk and potential losses, but also plays a big role in achieving financial satisfaction and security. Number 5. Embrace a simple way of living. You know, there's this mindset that some people have where they always feel the need to keep up with the Joneses. When they get a promotion at work, the very first thing they do is buy new furniture or move into a fancier apartment, even if their current place is perfectly fine. But here's the thing, avoiding this so-called lifestyle inflation means living a simple life even when your income goes up. It's about distinguishing between what you really need and what you just want. By making smart financial choices, like prioritizing essentials such as food and healthcare while cutting back on luxury spending, you can set yourself up for long-term wealth accumulation. Number 6. Engage in real estate ventures. Warren Buffett once said, "Price is what you pay, value is what you get." And let me tell you, that quote perfectly applies to real estate investment. It's a thrilling journey that demands financial security, and trust me, it never gets old. One of the fantastic things about real estate investment is the potential for a consistent income stream through rental properties. Imagine having that passive income flow in, helping you cover all the expenses related to your real estate ventures. Here's another great aspect. Real estate appreciates over time. And when that happens, the prices tend to rise. So not only are you benefiting from the steady increase in your equity as you pay off your rental property's mortgage, but you're also becoming a proud owner of a valuable share in the property. What makes real estate even more attractive is that it operates differently from other asset classes like stocks or bonds. By adding real estate to your investment portfolio, you're diversifying it and tapping into a new realm of opportunities. Real estate investments have long been a reliable hedge against inflation. As the value of real estate income tends to rise along with prices, you can enjoy the advantages of long-term appreciation. Number 7. Prioritize quality healthcare and insurance policy. Taking care of your health and having good insurance coverage can make a difference in catching or preventing serious health conditions early on. It's all about identifying and dealing with any health issues before they worsen and cost you more in treatment expenses. When a big chunk of your salary goes towards medical costs, it can damper your ability to invest in other things. That's why it's so important to maintain good health. It allows you to be more productive, and having insurance can protect you from financial hardships and those hefty medical bills. Remember, your overall quality of life depends on your physical and mental well-being. So, when you spend money on your health, you make a smart financial choice. Number 8. Multiply your investment options. By diversifying your investments, that is, allocating funds across a range of asset classes or industries, you can also increase your wealth. The idea is to reduce the impact of poor performance from a single investment on your entire portfolio. Each asset carries its level of risk and potential return, so it's common to allocate your investments among stocks, bonds, and other types of assets. A well-diversified portfolio takes advantage of this by blending them appropriately. By diversifying, you can benefit from the success of various industries and minimize the impact of a downturn in one area. For example, if you invest in energy, technology, and healthcare, gains in one of these sectors may compensate for any losses in another. It's important to note that diversification doesn't guarantee success or provide complete protection against losses. Therefore, it's wise to research or consult a financial expert before making investment decisions. Number 9. Invest in dividend-yielding stocks. If you're looking for a reliable source of income, investing in dividend-paying equities can be a great option. It's like this: when you buy stocks in a company that regularly shares a portion of its profits with shareholders, you receive dividends. You can increase both your ownership in the company and your dividend income by doing a couple of things. One way is to reinvest your dividends back into buying more stocks. Another option is to buy more stocks that pay dividends simply. Both ways can give your income a nice boost. Number 10. Optimize your tax management plan. Before acquiring a job and experiencing the impact of paying taxes on my earnings, I used to believe that tax planning wasn't for me and that I had no cause to be concerned about it. You can increase your revenue and leverage the effect on your finances by using effective tax management. Tax planning is a continuous process that you should always be aware of. Learning about tax laws and regulations, as well as the credits and exemptions that are available to you, is the first step in efficient tax preparation. Utilizing your IRA or 401k is another technique to improve your tax management abilities. These accounts provide tax advantages that let you invest and expand your wealth. You can lower your tax burden and concentrate on making more profitable investments by educating yourself, making tax-efficient investments, and using tax-efficient tactics. Number 11. Invest in retirement savings accounts. Do you recall when I said that managing your taxes can be easier using an IRA or 401k? Contributing to these retirement accounts is a fantastic method to position yourself for monetary success. Allocating funds to your retirement accounts should come after receiving your paycheck and making your investments. Along with maximizing your tax advantages, regular contributions to these accounts, such as employer-sponsored 401k plans or individual retirement accounts, IRAs, help you accumulate assets over time. The key to building a strong financial foundation through your retirement account investments is to start early and maintain consistency. Number 12. Create a college saving plan. Having a saving plan for college can have many positive effects and, in a way, even boost your wealth indirectly. Let me break it down for you. First, by giving your money more time to grow and increase through compounding, you can make the most of it. In certain countries like the United States, you not only get returns on your initial investment, but also on the earnings that accumulate over time. How awesome is that? These investments come with some pretty sweet tax advantages. You get tax-free growth, which means your money can grow without being taxed. Plus, when it's time to make withdrawals for qualified educational expenses, they're also tax-free. Number 13. Invest in renewable energy. Did you know there's a great opportunity to earn money by selling the electricity produced by power plants such as solar or wind farms? These power plants generate electricity, which can then be sold to consumers. With the increasing demand for renewable energy, investing in these projects can be quite profitable. One of the advantages of renewable energy installations is that they often generate a steady cash flow, so you can expect to see returns on your investment. Another benefit is that these installations tend to have a longer operational lifespan, which can increase the long-term value of your investment. So, it's worth considering if you want to make extra money. Number 14. Finance IP loan initiatives. When you invest in intellectual property, you give money to people that have valuable IP assets like trademarks or copyright that can generate passive income. You can make money through intellectual property royalties instead of actively managing assets or companies. The loan's intellectual property is scanned, another intriguing aspect of IP financing. You have the legal right to take possession of or license the IP to recoup your investment if the borrower defaults. IP is becoming increasingly important, and investing in it will help businesses tap into this expanding market. Number 15. Expand your finance through lending platforms. P2P lending has the potential to yield better returns than conventional savings accounts. Peer-to-peer lending is a type of borrowing where individual lenders and borrowers are linked. You receive interest as an investor for the loans you make to borrowers. You may diversify your investments with it as well. This operates through P2P lending platforms, which have widened access to investing in loans. Investors have transparency and control over their assets thanks to these platforms. When opposed to more volatile investments like equities, peer-to-peer lending offers stability. By doing away with conventional financial intermediaries like banks, it enables investors to earn potentially better profits. When you get paid and you are looking to expand your finances, investing in P2P is a fantastic option to consider. Building money from your paycheck is difficult and requires discipline and sacrifice, but once you succeed, you can secure your financial future. Always remember that perseverance and patience are the keys to attaining this goal. If you thought this video was useful, please give it a thumbs up. Do not forget to subscribe and enable notifications for our channel.